I would like to invite Mr. Amit Sachdev, COO M1 Exchange, to kindly join us on the dais.
Okay, good evening. I know it's late evening and a lot of very, very insightful sessions. Not sure if many of you would know what TREADS is at all. A show of hands, how many of you have heard about TREADS? Wow, this is fabulous news. I'm actually surprised, pleasantly surprised. Thank you so much, which means there is more popularity about TREADS. And that makes my task easier. Before I get into TREADS in that case, any questions you may have or any area about TREADS that you think I should cover before I get into my prepared presentation? That could be boring. Any one or two queries, clarifications that anybody may have? Yes, ma'am. No? Okay. If none, then fine. I'll start with the standard presentation. For those of you who have not heard about TREADS, why are we talking about TREADS? Why there's so much of buzz about TREADS? So, in case you heard the budget speech this time, in February 26, the finance minister spent very nice 3-4 minutes talking about TREADS and what's the value of TREADS for the MSMEs and corporates and banks, and that gave immense popularity to this term called TREADS. So let's get into what is TREADS all about. Now, before I get into the details, some 10 facts about TREADS that will give you some basic understanding of what is really happening in the world of TREADS. Number one, TREADS stands for, I love that, GPT full form. I know this. I hope, in case you don't know about TREADS, what does TREADS stand for? It stands for Trade Receivable. All of you know about receivables. We all have our money stuck in receivables. Electronic discounting system. If you have a receivable that is stuck and you would like to get the money today and not after 60 days' time, TREADS is for you. Number two, it is RBI licensed. There is a license, a platform of TREADS needs to get from RBI, just like one needs a license to do a banking, or one needs a license to run an insurance company, just like someone needs a license from RBI to run an NBFC. It's a license. So TREADS is not a government entity. There are multiple entities that can run TREADS if they have the license from RBI. It is actually borrowed from a very successful model working very nicely in Mexico. It's called NEFIN. And in Mexico, the government of Mexico is themselves involved in this platform, and it's worked wonderfully well. We borrowed this. Raghu Ram Rajan had this vision of setting up a platform because he saw something like that could work and benefit the entire MSMEs in India. Fourth, it helps MSMEs get their bills discounted, get money faster, and de-risk themselves also. It works on the marketplace model. Unlike a bank or NBFC who has capital, who has deposits to give this to their borrowers, the TREADS exchanges have nothing. They have no balance sheet. They're asset-light models. They primarily connect, just how an Amazon connects the buyers of goods to the suppliers. It connects the suppliers of capital, which is banks and NBFCs, with the people who need capital, which is MSMEs, and the corporates. It is live since April 17. It's been 9 years now. It's not a new concept. There are 5 TREADS exchanges in the country. I'll talk more about it in a later slide that you should know about. It's like, and you can choose which TREADS exchange you would like to work with. Just like you can choose whether you like to do UPI using GPay or using PhonePe or something else, or Paytm, you can choose your preferred TREADS exchange here as well. It has done about 3.5 lakh crore of financing so far in the last 9 years, of which this has happened in 26. In all, about 9 lakh crore of financing has happened so far in the last 9 years, of which 3.5 lakh crore happened last year in 26. About 1.5 lakh MSMEs are already benefiting from TREADS. They're participating on TREADS. About 7,000 large corporates are acknowledging those transactions. And about 75 banks and NBFCs are also participating on TREADS. The beauty of this model is, and the reason why it's working very well, is because the NPAs, which is what banks are most worried about, is less than 0.1%. Low delinquency, low risk, and hence banks are jumping with more and more liquidity. Now, the problem statement, why it was thought about. The reason, because there is a huge amount of MSME unmet credit, which banks were not comfortable financing. And hence, RBI thought, why not think about a model which brings in all of these banks together on one single platform, and that helps MSMEs get access to capital, liquidity, unlock their receivables faster. So while in next 4 years, the economy is expected to move from 4 trillion to about $7 trillion, all a function of where does the rupee dollar rate stabilize. But based on current trends, looks like we should reach about 7 trillion. The MSME gap, the unmet MSME credit gap is supposed to double from $300 billion to close to $500-600 billion. Now, MSMEs, of course, we all know, is the backbone of Indian economy, contributes about 30% to the GDP, contributes about 40% to exports, contributes about 60% to the employment. And hence, a very big agenda for us as a country, for the government as well. And that's the reason why TREDS came up. Now, the way the TREDS solves for the problem of this unmet MSME credit is by connecting the three participants: MSMEs, the corporates who owe money to the MSMEs, and the banks who are happy to finance this. Brings them together, ensures there is a win-win for each participant. For the MSMEs, of course, there's a win-win because they get access to the money, de-risk their receivables because they come to you today, don't have to wait, and there's no question mark whether you will get it or not. Number two, for the corporate, because the MSMEs get their money faster at a very, very cheap rate of interest. Next time, the same corporate gives a purchase order to the MSME, he builds in a lower cost of financing, and that helps reduce the cost of goods sold for the corporate as well. And that's the intent. For the banks, all of this works like a priority sector lending, PSL. And hence, a huge business opportunity without having to do anything at a very, very low cost. And hence, it becomes a win-win for all three. Now, multiple use cases from your standpoint that you should know about. Number one is very simple. An MSME supplies to, let's say, a large corporate like a Tata Motors or Tata Steel or HUL, and you would like to get this bill discounted. That's a classic use case being served for the last 9 years in all the 5 TREDS exchanges. Number two, assume you are the same tier 1 MSME who has supplied to Tata Motors. You also have your supply chain. You also buy goods, services from multiple of the MSMEs. Then even that part can be financed. And hence it works like a working capital, unsecured working capital from 75 potential banks for the second use case. The third use case is if you are a distributor and you are an MSME, which means turnover of less than 500 crores per annum. You sell to any entity, could be a dealer, could be an enterprise customer. You can get that bill discounted as well and get your money today. The dealer can keep paying after 30 days, 60 days, 90 days, as the case may be. So he has more working capital to buy goods, but you de-risk yourself by getting your money on day one. Very interestingly, you may have seen a lot of these products. There's something called vendor finance, which has been in the market for a very long time. Most banks offer it, which works on the concept of a loan, which means the MSME has to become a borrower in the books of the bank. And that has its own implications because you don't like, and your chartered accountants who don't like the debt to be shown on your books because that increases the impacts the credit profile of your balance sheet. So TREDS works on the basis of factoring. Very interestingly, factoring in the evolved economies like US or even China is close to 10 to 15% of GDP. Before TREDS came in, factoring in India was less than 0.1% of the Indian GDP because banks were not very happy offering this product for a variety of reasons. Now that we have TREDS, factoring has gone to more than 2% of GDP as a product. This is how it works. let's say you are a seller or a vendor to any large company. There's a buyer, could be the Tata Motors, Tata Steel. Once you raise the invoice after delivering goods or service, the buyer will confirm that this is a confirmed delivery of goods or service, basis which you as a seller will sell your receivables on trades by uploading the invoice on the exchange, the preferred exchange. Out of you can choose any of the 5 exchanges. And one of the banks or multiple banks will bid on that invoice, basis which the rate of interest at which this bill will get discounted is determined. Of course, the bank that bids the lowest is the one who will get the right to discount the bill. The supplier gets money on day one, and the buyer who had to pay to the supplier on the due date ends up making the payment to the bank which has won the bid. So simplistically, this is how the process works. Every night, 9 o'clock, a settlements process works in liaison with NPCI, how an NSC or BSC process works, where the settlement is done, the money is picked up from the respective bank which has won the bid, paid to respective supplier's account, or in case the buyer has to make the payment on due date, that money is picked up from the account of the buyer and paid to the respective bank which has won the bid on day one. This is how the trades has grown, and it is really growing exponentially. It's growing at 100% year on year because it is solving a huge problem from everybody's perspective, MSMEs, corporates, and banks. As I said, 9 lakh crore of financing has been done so far, of which about 3.5 lakh crore of financing happened in FY26. Now, the highlights of TREDS model that you should know why it is very beneficial for you. Number one is you don't have to do any documentation with any bank. Irrespective of which bank discounts the bill, a bank is like a supplier at the back end. All you need to deal with is the exchange, TREDS exchange. So the KYC documentation is done one time with the TREDS exchange, and then the TREDS exchange takes care of that documentation with the respective bank. That's their headache, not your headache. Number two, it is not a loan. It is covered under the Factoring Act. It is not shown as a debt, neither for the corporate, the buyer, nor for the MSMEs, and hence it remains very, very clean from a balance sheet perspective. Three, it's a completely digital model. It's like how you trade on NSE. Similarly, this exchange works like a digital exchange. You come, you upload an invoice, somebody bids, you go to screen, accept the bid that you're comfortable with, and rest of it happens automatically in the back end. You simply get money on the next day. From the corporate perspective, it ensures complete MSME payment compliance. As part of the regulation, the companies are supposed to ensure, and everybody is supposed to ensure, that they make payments to micro and small entities within 45 days' time. And this ensures that. In case they have not made the payment, it is not getting discounted, the exchanges make the payment on 45th day. Fifth part, it is regulated. And because it is regulated by RBI does the audit, the governance standards remain very, very high. This is an exchange that one can trust to do the right things. Almost every bank in the country is on the platform. There might be few logos which might be missing here, but they will get added. Pretty much any bank you would like to deal with, and a lot of NBFCs as well, are here on the platform. And what this does is, as more and more banks keep coming in, the rate of interest at which discounting happens has kept coming down, which is what this chart shows. The rate of interest is primarily a function of which rating category of buyer you're dealing with. If it's a AAA rated corporate, the risk is lesser, the rate of interest is lesser. If it's a BBB rated company that you're dealing with, then the riskiness is higher. Of course, the rate of interest will be higher. But the bidding process with multiple banks participating in bidding process ensures that the rate of interest remains the lowest. There are 5 exchanges in the country. As you would notice on the slide, there's M1 Exchange, which is a leading platform with about 36% market share. There's a company called RXIL, Receivable Exchange of India Limited, which is number 2, which is a JV between SIDBI and NSE. There's a exchange called Invoice Mart, which is the joint venture between Axis Bank and M Junction. And there are 2 new exchanges that have been around for a couple of years now, a company called C2FO and a company called CredX. Now, you can choose which exchange you would like to work with. That's a choice you have. Just like you deal with which all banks or bank you would like to bank with, you have a choice of any exchanges you would like to deal with. Now, how do you choose which bank or which trades exchange you would like to work with is a critical part, right? By the way, you can also work with multiple trades exchanges. Nothing stops you. Just like you deal with multiple banks, you have a choice of dealing with 2, 3, 4, or all 5 trades exchanges, so that in case the buyer corporate you want to get the bills discounted from, they are not on that one platform, but this is on some other platform, it is not a constraint for you. But in case you have to choose, there are 4 factors I would propose you look at. The first and foremost is which platform, just like you may want to choose to buy from Amazon, not on some other platform because there's an ease, convenience. Which exchange gives you the most convenient transaction experience? That's one, the truly digital experience. The second part is which exchange has the largest number of participants, largest number of banks, corporates, and MSMEs, because that gives you the chance to be able to transact in case your buyer is there. And more the number of banks means that most likely the rate of interest that gets discovered in the bidding process will be a lot finer. The third is the trades exchanges have also started offering products beyond trades, which means if you would like to avail of some other product like a dealer finance or an import or export financing, in case some of you are exporting as well. I know there was a topic about exports, and you would like to discount not just the receivables in India, but receivables from exports as well. Some of the trades exchanges do offer that as well, which is an additional convenience. So look around for which all products are of use to you and who offers that. And the last, but very important, is which all trades exchanges have the vintage, because more time they have spent, which means they're doing the right things from a corporate governance standpoint and other standpoints, and hence you can trust them. Eyes closed is how I look at it. With this, I come to end of my presentation with one message: trades karo. This is going to be highly valuable for you. Thank you so much.
I now request R. Srinivasan, Co-Chairperson MSME Forum, Bombay Chamber, and Director, IRA Consulting Private Limited, to please present memento to Sir as a token of appreciation. A round of applause. Thank you so much, everyone.